Boom, 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 boom. Traders, welcome. Welcome to another live Q&A session with Oliver Velez. My name is Oliver Velez, and I hope I'm your trader for life. Yes, yes, welcome. Come on in, guys. Wherever you're coming in from, come on in. Got another dynamic Q&A session this week. Interesting times in the market, interesting trading times, interesting times for all financial markets worldwide, including the equity market, the bond market, uh, the cryptocurrency market, Bitcoin in particular. Wow, wow, wow. Interesting times, guys. Interesting times. And we're going to talk a little bit about that today, but also I'm going to be taking your individual questions. I'll try to get through as many as possible because I sort of like to do deep dives in certain questions that really touch on things that I believe are timeless and things that can help a lot of people. I will spend sometimes a little bit more on one question versus another, especially when if I feel it has that depth and timeless benefit to it. Okay, so in those situations, I do eat through a lot of our time here, but over time, guys, we're gonna get to all of your questions, and this is what these sessions are about, guys. This is about us meeting from time to time, virtual, basically every single week, getting to know each other. Your questions also help me know what to really focus on in this growing channel. As I get more and more questions related around the same topic, it tells me that topic is something that my general following needs more depth on, or what have you. Now, with this being said, guys, I cannot tell you in all honesty that I always have an answer. Um, I will not always have an answer, and s- I can't promise you that every single answer I give is going to be appropriate for you or even correct for that matter. Um, Trading market play is a game of probabilities, and that's basically all we can do is come up with the item or the thing or the answer that it has the highest probability or the best odds of being right for us and true for us. But as I've always been fond of saying, the market itself is sort of like a microcosmic version of life as a whole, and we don't have certainties in our regular lives either. And that's what makes it so vibrant. That's what makes it so special. That's what makes it alive. That that's what makes us feel alive is the fact that we can't have certainty. We live in an uncertain world. We play and operate in an uncertain market, and we have to basically apply the laws and the rules of probability to our life as well as our trading. And so I'm I've always told you that the very same qualities that make for being a successful market player, they are the same qualities that make for being a successful anything for the most part, right? Whether it's being a business owner, an entrepreneur, whether it's being a father, a husband, a wife, a friend, um, a worshiper of your God, a member of your society. It doesn't matter what the thing is, but the same qualities exist in virtually every single activity. Every single activity known to mankind is rooted in the very same qualities that are required to become a good trader. We have to know in life when it's time to get rid of a bad, toxic relationship, a bad, toxic stock or investment. We have to know sometimes when it's time to double down, when it's appropriate, intelligent to do that, to double down on something in our lives, to double down on a trade, to double down on an investment, to double down on a relationship, to double down on a business, to double down on an opportunity. These we have to know when to basically call it quits, when to basically double down. We have to know in life when it's appropriate and intelligent to take some off the table. We have to know when it's appropriate to take all of it off the table. and call it quits and go out a winner. All of these things are life skills, and we learn them through trading. And this point, I always start off with a monologue, guys, but this point is important because I think that we get caught up too much in believing or feeling that trading is only the only benefit is a monetary one, but this could not be further from the truth. As I believe you become more and more mature in this activity we call trading, I think the more you become mature, the more you realize that the benefits beyond buying something for $1 and selling it for two, those benefits are far greater than the actual monetary benefits you might derive from that, because this activity makes you a better individual. This activity makes you more disciplined. This activity makes you truer to yourself. This activity um, builds an individual who can keep their word. This activity creates an individual who can spot opportunity in a sea of non opportunity and seize that opportunity with skill, with precision, with care, and with proper risk protocols in place. These things make for a better individual that you take into your society, a better individual that you take into your home, and a better individual. You become a better individual for your family, for your loved ones, for your businesses, for your friendships, for your relationships in life. And I've always said this, guys, that if you become more disciplined in your trading, it's impossible for that discipline to not spill over into every other corner of your life, because discipline doesn't just stop. It doesn't just say, "Oh, my time's over. You're finished trading. I'm no longer at work. I'm going to go sit out by the pool. I'm not going to work for you until you trade again." Discipline doesn't work that way. It is a universal quality. So you can't develop discipline in your trading and not become more disciplined in every other corner of your life. You can't become more responsible in your trading and not become more responsible in every area of your life. You can't monitor appropriately and intelligently the potential risks of a trade and not basically take that skill into monitoring the risk of a certain move in all other areas of your life. This is a life changing activity, guys, that goes way beyond buying something for $1 and selling it for two. And sometimes we get too hooked up on that. Sometimes we don't realize that we're winning even if we're not really monetarily winning in our trading, as long as you're making those step by step advancements, those improvements in the things that really count. All right, guys? All right, guys. Um Now, is my volume is too low? Is that what you're saying? Is my volume too low? Is this okay? Better? Better? Volume's better? All right, I can pick it up. Yeah. Yeah, let's do it like that. You want me loud? You want me loud? All right. You want your cats and your dogs in the background jumping up and down every time I say boom. Okay, we'll do it like that. We will do it like that. All right. Cool. Guys, as you know, I take most of the questions initially from my Twitter um, account. And if you aren't following me there, please do that, guys. OL Velez 007. I want you following me there. Now, this account, obviously, I specifically dedicated to Bitcoin, and the other accounts are sort of mixed. So if that bothers you, then don't follow me there. But if you want to sort of get a little ahead of the game, and also if you want to communicate with me a little bit more directly, this is the account to do it in. Of course, this one here in YouTube, and of course, Twitter as well. All right, guys. So let me take the first question here coming from uh, it's coming from a beachside bag holder. I started training 2 years ago. I triples my money. Wow, nice. Early with luck, keyword. And I lost it because of no self control and discipline. All right, I finally made the turn. Beachside is saying this spring after watching 1,000 hours of your videos over and over again. I appreciate that. Thank you. No one is better at technicals than you. I appreciate that, beachside bag holder. I truly do. But there is something I want to. This is not a question per se, But there is something that I do want to say about beachside bag holders comment, and it is this: you're supposed to lose in the beginning. Listen to me, traders. You're supposed to lose. Do you understand this? That it's okay, that you're supposed to fall when you're a baby learning to walk. That something is wrong if you don't. Something is not right if you start winning. Beachside bag holder started off wrong. He started off winning. Those wins were not his. Do you understand? Those wins did not belong to him. That money did not belong to him. It was almost as if beachside bag holder was stealing. You are not supposed to win before you become experienced. You're not supposed to gain before you put in the work, before you pay the price, before you sacrifice, before you go to hell and you come back. Do you understand what I'm saying, guys? This is the way it is, not only in trading, but in everything in life. And I will tell you something I'm getting a little tired of. I'm getting a little tired of this Instagram, Twitter, social media, um, popcorn, popcorn, microwave approach to everything. Like you have a right to success and gains and profits before you do something first. My God, who ta- if your parents taught you that, what book were they reading? Like, oh my God, this is the proof of work protocol. Life is based on proof of work. If you start your career just simply with a wish that I want to be a successful trader, that is not enough to be successful. You have to put time in. You have to put time in appropriately. You have to become educated. You have to become informed. You have to, over time, become skilled. You can't rush that process. Why? Because that process takes time, and time is one of the only things on planet Earth that you and I do not have control over. Do you understand? You can't make 150 extra Thursdays happen now. You can't rush that. You have to deal with a Thursday as it comes according to it time's own schedule. You can't say, well, listen, I want an extra 100 Thursdays, so let me speed that up. You can't do that. But God help you. Beachside bag holder turned himself around. Thank God. And I'm very proud to have been a part of that. But let me just say this: God help you. If you gain anything, not only in trading, but in life, God help you. May God have mercy on your soul if you get something before you put the work in that deserves it. God help you. God have mercy on your soul, because that is not yours. And you better watch out, because when it's time to give it back, and you will have to give it back, when it's time for life, the universe, the laws of nature to say, what are you doing with that? You did not put the work in and the time in for that. That's not yours. Give it back to me. Not only will that be taken back from you, but a lot more, just for violating proof of work. Do you understand? And so you're supposed to be bad. The first time you pick up a basketball, you're supposed to be bad. The first time you kick a soccer ball, you're supposed to be bad. Do you understand this? And so I I spent an entire career partially trying to subdue the expectations of traders. That is why there's not 20,000 people here, because I'm the one that tells you that you're not supposed to win, and you won't win, and you won't win for a while. Now, since you accept that, and if you do, let's get down to business, and let's get down to basically building our experience properly, because your success is on the other side of experience, not before experience. Beachside bag holder got success before experience, and he had to lose triple. I told you that if you gain something that is not the result of proof of work, Not only will you lose that thing, you will lose it 3 times or more. Beachside bag holder is living, walking, breathing human proof that I'm right. Okay, next question. Hate to beat that dead horse, guys, but every opportunity I get to basically split you between the eyes so that you have the right expectations and we can get down to business properly, I'm going to do it as many times as is necessary. All right. This question's coming from Mark. All right. Would you recommend buying Bitcoin instead of learning how to trade stocks? Hmm. I am young and I've not learned to trade yet. Should I just continue to buy Bitcoin instead of learning to trade? If you can't beat the market, um, then buy the market. And Bitcoin has a good average return. All right. This is actually a very interesting question posed by Mark. If Bitcoin has this amazing average annual return that far outstrips any other market, why should I learn to trade another market, and why not just buy Bitcoin? Um, this sort of reminds me, many years ago, I was asked, Oliver, do you like, this when I was very young, my answer would be quite different today, but I just remember this. Oliver, do you like your Rolls Royce um, better than your Ferrari? So at this particular time, right, I used to drive either a Rolls Royce to my trading office, or sometimes I'd drive my Ferrari to my trading office. And so I was having lunch with a bunch of my traders, and one of the traders asked this, and it became a classic response for me. Oliver, do you like your Rolls Royce? You like driving your Rolls Royce better than your Ferrari? I said, well, that's very difficult to answer because I like them both. And so I particularly like the Ferrari under scenarios like this: sunny day, drop the top back, nice open roads. And if it were raining, though, uh, I'd prefer the Rolls Royce, and so forth and so on. I think sometimes that life is made more difficult when unnecessary choices are made. There is no need to make a choice between trading and Bitcoin. Why not have them both? Why not have your Rolls Royce and your Ferrari? Why not have Bitcoin and your trading? Let me show you something here today. Let me show you something. Let's see if I can get this up for you, right? Take a look at this today, guys. This is my traders. I was with 200 plus traders of mine this morning. We traded together. All right. We traded Apple amongst a variety of other things. I traded predominantly Apple. I walked my traders through this trade step by step. All right. Many traders did it with me. Some traders just decided to watch. I made $4,900 on this trade. Now, I will take $3,000 of this today and I will buy Bitcoin with it. I bought Bitcoin every single day of my life from March 2020. And I will continue to do this. I'm not telling you to do this. I'm just telling you what I do. I bought Bitcoin every single day of my life since March of 2020. And if I have excess today that I don't need to live a very, very nice life, and it's just going to sit there in cash, no, I'm putting it in Bitcoin. That's just me. All right. And so, you know, I just, I, trading has changed my life. I started this conversation telling you that it is way more valuable than that $5,000 I made this morning in 20, no, in 17 minutes, right? There is something sublime. There is something spiritual about this activity. And do you know why that is the case, Mark? And I'm speaking to all of you, but Mark in particular, because Mark asked me this question. Because before there's any hope of becoming a better trader, before there's any hope or chance of mastering the markets, you have to first master yourself. And let me ask you this, Mark. How many people in life do you really believe have truly mastered themselves? The mastery of oneself, which has been an age old pursuit for millennia, the mastery of the self, the search for the self, the pursuit to master who you are, and what you do. Um, this is a very, very scarce thing in the world. Most people are stirred by something or someone. They believe they're independent. They believe that they're free, but they're really not. So this activity actually, if you don't stop and you continue with it, will lead to you mastering yourself, subjugating those emotions that were never in check before, questioning the constant chattering in your mind that was never questioned before, right? Doubting how you feel is something that trading made me do. When trading made me realize that my feelings are not rooted in reality, that most of the time when I am fearful, that's when I should be acting. And most of the time when I am excited, that's when I not should be acting. I should not be acting. That I fear when I should not fear, and I feel greedy and confident when I shouldn't feel confident. Trading made me realize that something is off there. Why is it that when I'm in profitable territory, I get fearful that I'm going to lose the profit, but when I am in negative territory, I get bold to try to get it back? That's backwards. I should fear in negative territory and be hopeful in profitable territory. Trading made me realize that somehow I'd been conditioned to get it wrong. Do you know the value of that? Do you know how much more valuable that is than buying something at 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 $20 and selling it for $20.75? This is self mastery. This is learning who you are. This is what the ancients lived their life for. Trading is the vehicle that leads to that. So, Mark, please learn to trade, if only for the self mastery part. Also, trading can give you that cash flow that I believe is priceless. Cash is trash today. I admit that. Cash sitting, rotting, accumulating in some bank account, the cash beyond your needs, that sitting there and growing is trash. Do you understand? But cash flow is king. You want cash flow, and trading can help you do that. Cash flow is more valuable than than cash profits. You understand? So, if, as an example, there's two companies. One makes double the profits. Company A makes double the profits of company B. Company A has poor cash flow, though, which means that its profits come sporadically. All right. But they come sporadically. So there might be long periods of time where there's no profits. And the company's burning prior profits, burning cash until boom, finally there's some sale or something, and boom, they get a little more of a windfall and their profits go up. So that company makes twice the profitability as company B, who who just gets cash every single day, cash flow every single day. Never burns through cash because whatever they burn, they replace. They're replacing constantly. What company is more valuable? See, most people would just look on a piece of paper and say, oh, more profits, less profits. That one's more valuable. No, 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 no. What's more valuable to me, having a trader that sporadically makes money and loses, but every now and then gets a nice fat win, but loses, little. It's so sporadic, I can't rely on anything consistent there. Or the trader that doesn't make as much as that trader on average, but just constantly, every single week of their life, plus, 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 extra, 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 extra. You can set your freaking watch by the profitability of that trader. Less profits than that one, but more reliable. That trader's more valuable to me than the sporadic one who gets the big windfalls. Do you understand what I'm saying? Cash flow is king. Cash is trash. If you are building up a mountain of cash, that's dumb today. All right? Building up a small hill of cash for emergencies and things like that, and then finding what to do with the excess, that's smart. Okay? And structuring your life in a way where there's something that's generating, throwing off cash. That can be trading. It can be an extra side business. It can be painting on the side. It can be cleaning people's garages out. It can be cutting grass. You understand? It can be being a fixer upper of sinks and toilets and drywall and painting, whatever it is. Creating some cash flow in your life will stabilize it, right? And give you that base, that comfort, that security to take the next step in your life, which is to bet on solid things with the extra. All right. So please, for two things, because trading has that ability, Mark, to give you cash flow, don't drop it. You're young. And even if it doesn't work, you're still going to be young. So by all means, please, you above all should be doing that. And don't not do it because you're just going to become a better person, whether you make it or not. And I think that that even has a higher value than the potential monetary success this activity can bring about for you. The last thing I will say about this question, Mark, is that yes, please, I'm talking a lot about the trading side, but Bitcoin is this is what a lot of people don't understand. Bitcoin is a savings technology today. It won't be forever, but today it's a savings technology. It is not an investing technology. It is not a trading technology. Those who trade Bitcoin are stepping on dollars to pick up dimes. It's freaking ridiculous. All right. Those who are looking to buy and sell it for a weaker currency just don't understand what this thing is. You don't sell the strongest thing in the planet, not based on price, but you don't sell the hardest money for the worst money and be proud of that. All right. What you're doing with Bitcoin is you're banking on the next 4 to 5 years to 10 years out. Right? That's what you're doing. And you're using it as a savings entity now with 2026 and 2030 in mind. You are ignoring what the price is today. You're going to use the volatility to your favor by making sure every single week you just sock $1, $5, $10. I don't care how freaking small it is. This is the approach that I'm teaching not only my family, I'm teaching my family of traders this or what have you. All right. If we did this with the S&P 500 all the way back in 1986 when I first started, and I did do this, every single week just put something in it, where would you be today? You'd be extraordinarily wealthy today. If you did this with Apple stock from 1997 or Microsoft stock from 1994 or Amazon stock from 2001, I did this very thing with those items. The S&P 500, I did it with Microsoft. I did it with Apple. I did it with Amazon. I did it with gold, and I'm doing it with Bitcoin. There are certain things that you have to see beyond selling it for an extra few dollars, and you know those dollars are going to be worth nothing in 5 years, when this in 5 years is going to be worth exponentially higher than the price today. If history's any guide, Bitcoin in 2026 is going to make this price today at 22 or 23 or wherever it is, it's going to make it look freaking small. The same way today's price in Bitcoin, 22,000, made $200 look small years ago, and $2 look small years ago, and 20 cents look small years ago. My $7.50 buy of Amazon looks small today when it reached almost $4,000. There are certain things you have to know how to categorize. There are certain things that should be traded. There are certain things that should be invested in. And then there are certain things that should be used like a freaking savings account. And Bitcoin is the freaking savings account. It is not the trading account. It is not even the investment account. No, Tesla is the investment account. Square is the investment account. Do you understand? But Bitcoin's not an investment. You have to think of it like saving. So Mark, save. And Bitcoin, that's what I'm doing. That's what my kids are doing. That's what my family's doing. That's what my traders are doing. That's what everybody's doing. All right? Save. Just and freaking forget the price. If you buy every week, who cares? Down is good. We're thinking 2026, 2030. All right? And then trade everything else. Trade stocks, trade options, trade bonds, trade futures if you want. Trade your mother-in-laws back and forth for all I care. Pet rocks, Cabbage Patch dolls, whatever it is, trade everything else. Just don't trade that one. All right, that's my advice to you. It would be great if we could trade mother-in-laws, right? Woo! All right, okay, cool. All right. Do we love you too, Heecham. Love you too. Hey Alfred, do you still have your someone's asking me about the Celsius. Do you have USDC on Celsius or did you take them off? Look, guys, I don't know what's happening with Celsius. There are rumors floating around, obviously, that they are insolvent and have been having solvency issues for a while. I don't know. But all I do know is this, that for the last 7 months, I have been shouting from the rooftops as loud as I possibly can. What have I been shouting? Get your Bitcoin off exchanges now. This is not a drill. I'm going to ask this question and I want to see people respond. How many people have seen me, have witnessed me put that post out, put that message out more than once? Please tell me right here in the comments. I'm going to wait. Get your Bitcoin off exchange now. This is not a drill. How many people? How many times? How many times did I tweet that? How many times did I video that? How many times did I tell you that in my messages? How many times did I tell you that in my Bitcoin Trading Club? How many times over the past 7 months have I been telling you this? All right. How many times have I said, if you don't have custody of your Bitcoin, you don't own Bitcoin, you don't have Bitcoin. If you don't have the actual keys to the Bitcoin's not yours. And whoever has the keys can do anything with their Bitcoin they can. Now, Celsius is saying you can't take your Bitcoin off exchange. Now, why? Because it's not your Bitcoin. Do you understand? It's not your Bitcoin. To me, when you don't self-custody your Bitcoin, you are eliminating one of its most special qualities. Bitcoin is the only asset on planet Earth where we, regular people, finally have the ability to have true self-sovereignty over the asset, to have true ownership of an asset that cannot be confiscated like gold, like your stocks, like your cash in the bank. All of that's confiscatable. Bitcoin is not. The first asset in the world The first asset ever to be introduced to mankind. The first property where no one can take it away, no one can ban, no one can get rid of, no one can control, no one can debase. How do you ban 12 words? You can't. It's not bannable. How do you hack 12 words unless you give the 12 words out or be sloppy with the 12 words? It can't be hacked. It can't be stolen. It can't be confiscated. It can't be debased. It can't be controlled. It can't be manipulated. And I'm not talking about the price, guys. Price is bullshit right now. Do you understand? There are times in an asset when price is a liar. Price is not the almighty truth of an asset. Do you understand? It's not always price. This is what is called this inefficiency between price and the value of a thing is what creates the opportunity. When you buy something, you're buying it because you think it's mispriced, right? You don't buy it because you think it's properly priced. Because if it's properly priced, then it's can the it can go it's obviously has no upside potential. You buy something when you think the price is lying. And I am telling you that I can only tell you what I believe and feel. I believe that the price of Bitcoin is lying. It was lying at 69. It was lying at 3,000. It's lying at 22. The price is a liar right now. Just like the internet's potential was lying in 1994. Guys, I had my first website in 1995. Bitcoin is in 1994, 1995. Again, we're experiencing the internet all over, but this time it's the internet of money. We already saw what the internet of information, the internet of knowledge did for the world. It changed the whole world, but something remained untouched. Something remained unrevolutionized. Information was revolutionized. Knowledge was revolutionized. The way we read, the way we learn, the way we have sex, the way we do everything in life was revolutionized by the internet. Only one thing escaped that revolution: money. Money escaped the revolution. Money escaped the evolution that the internet brought about to the entire world. But no, 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 not anymore. Bitcoin has come to take the baton from the internet, which did its job for information and knowledge, and it is now saying the same thing that my brother did with information and knowledge, I am now going to do to you, money. It is going to fix money. It is going to make money more efficient. It is going to take it out of the control of those who have abused it at our expense. And this is what we're saving for. We're not buying it for next week, next month, next year. We're buying Bitcoin for 2026 and 2030. And if you don't have that kind of time frame, don't touch it. Continue to live your little, small, short-term oriented life. All right? But if you can't give it that amount of time and ignore the price in between right now, then this is not for you. And basically, no other big opportunity ever in life is for you, because nothing big comes in a short period of time. Nothing. Nothing. I just told you we talked about the proof of work. Did we not? Did we not talk about proof of work? Everyone expecting trading gains now when you're supposed to lose now? Just keep doing this every single week with your sights on 2026 and 2030. Your future self, in my opinion, I can't give you financial advice. I'm just a guy on the internet. But I will tell you this. I believe with every fiber of my being, I believe with every ounce of warm blood running through my veins that your future self in 2026, 2030 will thank you. Your family will thank you. Kids not even born in your family yet will thank you. That is what I believe. Now, could I be wrong? No, I'm teasing. Of course. Statistically speaking, I can be wrong. but I don't think so. All right, I don't think so. All right, guys. Hey, coach, when should we increase size on a play? When the risk is low or when the probability is high? Um, this is a good question. The person goes on to say, I have seen you play heavy size when you see low risk. Can you talk more on this? Yes. Okay. The question is, can size be determined by the amount of risk or the risk unit that you're taking in a trade? All right. And the answer is yes. My size is not entirely determined by risk, but it is partially so. So let me give you an example of this. Wow, $1.99. Thank you, Clayton. I love it, man. You remember, man. I hope the family's doing well, and I hope the baby's doing well as well. Clayton, thank you. So here, guys. Um, Let me give an example of this. Let's say I have a maximum loss per trade of $100. Listen to me carefully, traders. Built into my trading plan is this rule: I will not lose more than $100 on any given trade. That is part of my trading rule, right? As an example. Now, this play I'm about to take has a risk of 40 cents. So the stop, if I take this trade, the stop is 40 cents away. If I take 100 shares of that play, I'll lose $40. But if I take 200 shares of that play, I'll lose $80, which still stays within my maximum $100 loss per trade. I'll do 200 shares versus one. You see what I'm saying? So that helps me determine what size am I going to play here? Can I get away with more without losing more? So I'm going to lose the same 100 or less, but with 200 shares, I have a greater upside potential than with 100 shares, but with the same risk. So I do use risk to determine size. Another example, just to drill that point home, I have a $100 maximum loss per trade. My risk now is 25 cents. Let's say it's 23 cents. Just a little bit below 25 cents, because that's where the stop is. Now, we don't determine what the risk is. The trade actually does. So on this particular trade, I'm buying above a small bar, right below that small bar. It's 23 cents away. I can do 4 lots on this play and not increase my risk of $100 or less. You follow what I'm saying? And so one trade that might have an 80-cent stop, I can only do 100 shares. The trade that has 40 cents, I can do 200 shares. The trade that has a 23-cent stop, I can do 400 shares. So my risk is the same on all of those trades, but the upside potential is greater with the greater size. So yes, I use risk, my risk unit to determine my risk unit and my maximum loss per trade to determine how big or small the trade's going to be. But that's not the only thing that I consider as well for size. I consider upside potential. And I consider not only upside potential, but time duration of the trade. So if my time duration of the trade is going to be very short, my size goes up. Let me give you an example. If I'm going to hold a stock for 5 years, I'm going to play it smaller. If I'm going to hold the stock for 5 minutes, I can play it much bigger. Why? Because what's the odds of something bad happening in 5 years versus 5 minutes? The odds are exponentially higher over 5 years that the unexpected in a bad way happens to me. So I have to lower my size with a 5-year play. But 5 minutes gives me a short enough period of time to believe that a meteor is not going to hit planet Earth, in which case the trade doesn't matter anyway. All right. No additional war is going to break out. In this 5 minutes, the Federal Reserve is not going to hike interest rates by surprise. Do you follow what I'm saying? So my point is that time duration, the smaller my time, the time duration of my trade, the safer the trade. The longer, the riskier the trade to a certain extent. All right. This is not universal, but to a certain extent, I want my traders thinking this way. So to take that concept to a pure trading perspective, if I'm gonna if I'm gonna play this play for 2 or 3 bars, so I'm buying right now, and I think the stock can shoot up 2 or 3 bars after this buy. Buy, boom, boom, out. Okay, that's a short-term scalp play. Buy 1 bar, 2 bar out. All right, or short 1 bar, 2 bar out. Okay, that's a scalp. That's kind of like a scalp play. That play I can play bigger than if I'm going for a play over an hour or so, 50 minutes to an hour. So now, because my money is exposed to the possibility of danger longer, all right, I have to, but my potential gain is bigger. I can afford to shrink the size. The shrinking of the size doesn't mean I make less. I could make more because my time horizon is longer. But because more can go wrong, I'm also going to shrink my size. So time duration also, so time duration of the trade, risk of the trade, and the potential of the trade as well. If the potential is very short, my size goes up. If the potential is bigger, my size goes down. All right, guys, I hope that helps. All right. Can you give your thoughts on BTC? I think I did. But I think somebody wants my thoughts on BTC just a little bit more technically inclined, I think. So let's do that. Why don't I do that? Can I do that? Let's do that. All right. We can do that. Okay. Let's go over this. Let's go over this, shall we? Shall we? Shall we? Ah, okay. All right, guys, what you're looking at here is let me see if I got this right here. Okay, yes. You're looking at a monthly chart of Bitcoin. And the weekly and monthly time frame is really, in my opinion, the most appropriate time frame if you're playing this from this point of view of it's not what it is today. I'm playing this for what it will be 5 to 10 years from now. Because what it is today is a baby. It's 13 years old. All right. What will it be 20 years? What will it be when it's 20, 21 years old? All right. That's what we're playing this for. And what I believe that too many people get hung up on, guys, is they get hung up. I keep doing this. They keep getting hung up, right? They get hung up on what Bitcoin does from the highs. So here's what they do. They focus on Bitcoin doing this. You see? This is what they focus on. This is what they focus on right here. This is what the news focuses on as well. All the naysayers focus from top down. All right? They focus from top down. What they all fail to do is focus this way. It's not the highs, dummy. It's the lows. It's not the declines, dummy. It's the rises. Do you understand? So if I were to put these lines together side by side and we stood them up vertically, right? So you would see the ups like this, right? You would see the ups like that. And then you would see if I put these black lines and stood them up next to, you'd see like that. You see? many people focus on the drops but not the rallies. So, for instance, as an example, I got here, guys. Take a look at this. I got into Bitcoin right here. This is my first buy. Let me show it to you. Let me actually show it to you this way. I will show it to you on here is my buy right there. Boom, boom, boom. I bought all the way down, starting from just under 6,000. These are my buys right there. If you don't believe me, all right, if you don't believe me, see this down? This was collapsing. Do you understand? And I was buying on the way down, starting at right under 6 and every $500 down. So I bought just under 6, right? Just under 550, just under 5, just under 450, just under 4, like that. And the number that I bought was like this. So I bought like this. I bought a 5,000, let's say 5,800, right? Then 5,000, all right? Like that. And then 4,800, 4,300. You know, like that. And then 3,800. And this is the lowest price I got right there. That was the lowest buy. But I did this in a pyramid form. So I started light. So let's say you start off with light. I'm sorry. You start off light here. I keep doing this wrong. I keep drawing an 8. Why am I drawing an 8? And then heavier as I got lower, heavier. You see? Heavier on the way down. That is a pyramid buy ladder. That's how institutions accumulate an asset. They pick a zone. Why did I pick this zone? Very simple. This was your last bottom area. Okay. So this is what I did. If you don't believe, and I got 6,000 traders. I had 6,000 traders listening to me and saying, it's time now. They were waiting for my signal. It's time. We nailed this bottom. When everyone was saying that Bitcoin was broken, it was over, it was going to zero, it was trash, it was everything you hear now, this is what was going on. All right. Now, take a look at this. If you don't believe me, I think I have it here. I don't know if you can hear that. I don't know if you can hear that. But anyway, take a look here. Look at the date. I'm gonna point the date to you. Look at that date, March 12th, 2020. All right, look at what I'm saying here. With Bitcoin falling over 25% today, 25%. I made my first big move into it. I bought between the prices of 57.70 and 5,900. I'm actually hoping for lower prices to come to accumulate more. We shall see. This is a long-term play for me. Stay tuned for more updates. I plan to walk you through every step I take. From this day, guys, this day right here, March 12th, 2020, all right? I bought Bitcoin every single day of my life, all right? I've got people commenting on this and saying, one person said on Twitter when I posted this, one person says, well, because I posted some of my recent buys, right? Which one of those buys did you, this is what the trader said, Oliver, which one of those buys did you expect there to be a bottom? Like in this facetious way, in this negative way, like, damn, you bought all those times thinking it was the bottom? And I'm like, no, Einstein, I buy every day. All right. I make money every day. I take a portion of that and I buy Bitcoin with it every single day. And I've done this from March 20. Now, my question to you is this. If you treat this more like a trading thing, right? This is what you do. If you treat it more like a trading thing, let me show you. If you treat this more like a trading thing, you're going to wait, right? Let me show you this. You're going to wait for things like this. Let's get the moving averages up here, right? Let's get a 200 period moving average on there because I think it's important to look at this right now. All right. So let's take this. Let's make this a 200 weekly moving average. I want to show you this. We'll do style. We'll turn that to red. So, all right. We'll make that a little bit thicker. There we go. Nice. Okay. So if you do this from a trading perspective, right? You're going to wait for maybe there. And yeah, here. And now this is one of the other rare times we're coming in contact with that rare 200 weekly period moving average. But let me just tell you this. You would not make more money than me just buying there. You see, I have bought every single week of my life from here. And you just coming in here and there, you will not outperform me. You will not outbeat me. Even though, yes, I bought here, I bought there, but I bought there too. And while you do your little buy here and sell it somewhere here because that's a double, I'm thinking 2026, 2030, and I'm thinking that this price, these prices here, you can laugh at me all you want to, right? And people laugh at me because I bought here. Why am I doing this wrong? And I bought there, but they don't ever want to tell you that I bought there and there every single week, though. Each bar is a buy of mine, right? Why am I doing this? Because I believe that this is the future. Sorry. I believe that this is all right. I'll do it for you. It's a little hard here. Yeah, it might have some. It might have some pullbacks along the way, but that to me is what I'm banking on. That's the future. That the same way these prices seem high, these seemed high too. These seemed like high prices before. At $20, at $60, at $120, at $8,000, at $40,000. All right, this is a baby. Do you understand? The equity market is 170 something years old, the US equity market, 170. The bond market is over 300 years old. Gold is 5,000 years old. Bitcoin's 13 years old. You freaking kidding me? Like, imagine buying the internet when it was 13. The internet came into existence in the 1970s. Imagine buying the internet when it was 13. Imagine buying Apple when it was 13. Imagine buying Microsoft when it was 13 years old. Microsoft's 50 plus. Apple's 48, 49. Imagine buying them when they were 13. Do you understand what I'm saying? Amazon's 26 years old. Imagine buying Amazon when it was 13. Imagine buying Google when it was 13. You don't have to go back that far. It's a baby. Oh, but Oliver, it's so volatile. It's so volatile. Dude, weren't you volatile at 13? Weren't you more volatile at 13 than you are today? Come on, give me a break. Man up. We dollar cost average because it's volatile. All right. So look, guys, I don't believe that there could be a better time to start if you haven't started yet, because we only have how many times in Bitcoin's history do we have this? It's like this is the sixth time, maybe the sixth time in history, in its short 13-year history. So what am I doing? I'm freaking ignoring the price. I ignored the price all the way from here. I'm ignoring the price. All right. No one's going to care when Bitcoin's 200,000. No one's going to care. Did you buy it at 24,000 or 22,000? That's very important to me. I know it's 200 now, but which one did you buy it at? Not only is no one going to care, you're not even going to care. And when it's 2 million, no one's going to care. Did you buy it at 22 or 18 or 30? Come on, guys. You got to have a different time preference with certain things. All right. With Apple, I had a 17-minute time preference. With this, I got a 10-year time preference. And I had a 10-year time preference with Microsoft, with Apple, with Amazon, with gold, and now with Bitcoin. And I can already say I told you so, but I'm going to really I'm really going to tell you I told you so. All right? All right, guys. I can keep beating this horse dead, though. Nobody's going to believe me. It doesn't matter. No one believes me. What am I doing? No one believes me. No one believes me. Give me a second here, guys. No one believes me. I know. I know. I know. Damn, Karen. I don't know how much that $40 in Indian rupees translates to, but I truly appreciate it. Thank you so much, guys. Thank you so much. Fabulous phone call. Okay, Oliver is the best chart to read crypto. Oliver, what is the best chart to read cryptocurrencies? Guys, first of all, I'm sorry, I'm a Bitcoin only kind of guy. All right, I don't fool around. I don't cheat. I used to, but I did that. I made a truckload of money. My traders too, guys. We killed the altcoins. Today, I'm so glad I left that world. It didn't take me long. I went down the Bitcoin rabbit hole, and it became extraordinarily clear to me that most of that stuff is a scam. I would say that 98% of all altcoins are nothing but promises with marketing behind it, and useless promises. Like, not that we need any of these so-called use cases for these altcoins. And let me just say this. I don't want the freaking alternative of anything. I don't live my life like that. I want the original. Give me the original. I don't want the carbon you should not want the carbon copy of Oliver Velez. There's a lot of carbon copies out there. You should not want the carbon copy of Oliver Velez. Don't settle for that. Settle for the original. If you find what I say valuable, if you find our time together valuable, then why would you settle for a carbon copy of me? Why would you settle for a student of mine? Why? I mean, not to trash on any of my students that are out there teaching, but that I would be like, wait a minute, who's your teacher? I want the original, baby. I don't want a freaking faded carbon copy. I don't want the alternative choice for anything when I can have the pure original one. Do you understand what I'm saying? I don't want an alternative to Bitcoin. I want Bitcoin. So I dropped trading all of that stuff as I when I realized there is no other Bitcoin and never will be, not in my lifetime, not in your lifetime, not in your kid's lifetime, not in the history of the world. This is a once in a time thing. And people tell me, Oliver, but why do you feel that? Why do you say that? It, everything is replaced. No, everything is not replaced. You know, air is not replaced. Water can't be replaced to live. And the freaking wheel was one of the greatest inventions on planet Earth. When's the last time there's a new wheel? Fire was discovered. Nobody created new fire. There are certain things that just have this special place where they will never be duplicated. Can you make a wheel look a little fancier? Yeah. And we can do that with Bitcoin, but it's not changing the fact that it's a freaking wheel. And no, there will be no wheel 2.0. Do you understand? Tell me you understand what I'm saying. That there will never be a wheel 2.0. There's the freaking wheel, and that's it. Done, over, forever, forget it. There's no 2.0. Bitcoin, no 2.0. No alternative, nothing. All right? Nothing. I'm sorry. So what time frame is it best to look at Bitcoin? I think I answered that. Weekly and monthly. Step back, scroll out so that you don't get lost in the FUD and the nonsense that goes on with Bitcoin day to day. Why is it that more than Apple stock, everyone's talking about Bitcoin? You can't be a professional and go on a financial program without someone asking about Bitcoin. Do they do that with Microsoft, Apple, gold, silver, copper, oil, or anything else in life? Why do you think that is? Because it's not making an impact? Because it doesn't have people watching, scared, some excited, some threatened, some anxious? Like, why is it that every time the chairman of the US Federal Reserve Bank is asked about, every time he steps in front of a mic, he's asked about Bitcoin? Why? Why is every politician asked about Bitcoin? Why is every billionaire asked about Bitcoin? Warren Buffett, Bill Gates. Why? That doesn't exist for anything else on the freaking planet. Only one thing today. Every single person has to be asked this question. What do you think about Bitcoin? That alone right there should tell you this thing's success is freaking almost guaranteed. You can't buy that kind of marketing. You can't buy that kind of brand awareness. Do you understand what I'm saying? You can't. All right. All right, let me take some questions here. Show Apple with the 200 like you show Bitcoin. I can do that. That's coming from MF Hussein. I can do that. I can show Apple with the 200 like I did Bitcoin. Okay. Now, guys, Apple is one of my largest well plays. It always has been, all the way back from 1998. Okay. Many of the traders who've been with me for decades, they know that this is what we've had for a very, very long time. I will show you this. And so you know, the Apple there. Let's do it. And this person wants to see Apple with the same weekly 200 on here. We'll get the 200 period moving average there. I've been going over time on these things. That's because I get on my soapbox, guys. I'm sorry about that. But there are just certain things I'm passionate about. Sorry. It's me. Lo siento. All right. Sorry. All right. Cool. So you can see Apple, right? Um, During its historical times, coming in contact with its 200 period moving average. It has yet to go. All right. Now, there are several ways to look at this, right? First of all, Apple is holding up very well. Now, Apple is the most, one of, if not the most owned items on planet Earth. Okay. It, up until recently, was the most valuable item on planet Earth when it topped a $3 trillion valuation. It's not that now. But some people might say that we're not done with this until Apple gets here. You see, this is not necessarily true, but I'm just saying that some people might suggest that because Apple has only dropped there, we have more downside in everything that is considered risk on. Why? Because usually a bear move to the downside is not over until the last of the strongest crack. So things crack in waves, right? In a bear market. First, whatever's on the outside of the risk curve, guys, right? So check this out. So whatever is on the outside, the furthest outside of a risk curve, that will crack first. And then your more conservative growth things will crack second. And then your really secure things crack last. And then you're done. When the securest of the securest, the strongest of the strongest finally give way, you're done. So Apple is one of those most secure of the most secure things that we've had out there. And it's starting to crack now, but it's only halfway. At least if we use the 200 period moving average as the guide. So one can look at this and say there's still more downside because Apple should drop more. Now, if to give you an example of this, take a look at this, guys. To give you an example of this, take a look at this. So when we look at something like ARK, which is Kathy Wood's ETF, I want you to note when Kathy Wood's ARK started cracking. All right, from here. Now look at where that is on the chart. That's in the first half of 2021. The market, in all of its collective wisdom, was really forewarning of the bear coming. Do you understand? ARK is considered way out. Hasn't made a new high since, right? So Kathy Wood's ARK started here. Apple started later. Remember, the higher risk, they start cracking first. Now we're starting to get quality cracking from here. I would say now quality is cracking. Risk started cracking here. And the next level of risk started cracking there. And now quality is starting to crack. So we are closer to the end than we are to the beginning. I don't care what the news says. I don't care what the general feeling is out there. We've been cracking since 2021. This is not a new phenomenon. The bear market did start here. It just didn't roll to the quality until here. Tell me you understand this. Bear markets start way before anybody's even thinking about a bear market. Do you understand? And bear markets start when other things are still going to new highs. It's only in history that we look back and say, I realized the bear market really started in 2021. when you start to look at how the bear rolls quietly from one group to the next. And it's only becomes clear and obvious when the very top quality that people rely on or people are exposed to start to drop. No one's really paying attention when the non quality things are cracking and having trouble. And if you think about it, there are 15,000 things, 18,000 things that trade every single day. Yet you only hear about what? How many? 1, 2, 3, 4, 5. You hear like about eight things over and over every single day. Apple, Microsoft. Da, 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 da. You hear about the same 10 or 15 things. But there's zillions of other things that nobody talks about on any given day ever. And they trade every single day. And while those things are cracking, no one's talking about them. No one's paying attention. But the bear is quietly waking up. And he's going to hit those first. And the bear eventually finds its way up the ladder to the highest quality. And it's only when the highest quality starts taking a hit that the world starts to pay attention, that the bear is awake. Oh my God. Do you understand? And so when quality starts to be hit, you know you're at the end because it's been rolling for a while. If you go back to Bitcoin here, look at when Bitcoin started cracking. Right here. Brief new high. Now, if you look at that, that should be November 15th, in the middle of November. This is exactly along the lines of Apple. All right. Apple began to crack at this point as well as Bitcoin, but Apple is more institutionalized than Bitcoin. Apple's older. It's a senior citizen compared to Bitcoin. So Bitcoin will race to the downside faster than Apple. But get this, it will turn and run to the upside faster than Apple too. It does both faster. Tell me you understand this. It's the fastest horse in the race. It's the fastest horse in the race. Got this? You got it, my babies? David's asking, Oliver, how do you monitor the world markets in relation to each other? You have to have an overall macro view of things and kind of know through experience, knowledge, training, how these macro things fit together. You have to be also aware of macroeconomic cycles, right? So, for instance, if you know that the US's monetary policy is one of the biggest engines of global growth or the lack thereof, then you want to focus on the US's monetary policy. Okay? Specifically, the actions of the Federal Reserve. Now, the Federal Reserve will basically be in two, either on one side of the coin or another side of the coin, and that is they're in a quantitative easing mode, or they're in a QE mode, quantitative easing, or QT mode, quantitative tightening. Now, without being too specific and being too nerdy with this stuff, the bottom line is that is the Federal Reserve making money available, or is it taking money out of the system and making it less available? Money being dollars. Is it flooding the world with extra dollars? Because if that's the case, all hard assets are going to rise because the dollars become less valuable when you flood more into the system. And if the dollar becomes less valuable, whoever receives these extra dollars will immediately switch this melting ice cube to something that doesn't melt as quickly. Real estate, Bitcoin, gold, Apple. So stocks became something that melted less than the US dollar. So people would get these dollars and give give it to Apple. Get these dollars, give it to Microsoft. Get these dollars, give it to gold. Get these dollars, give it to real estate. Get these dollars, give it to Bitcoin. When the opposite takes place, boom, you pull money out of the system. Now dollars become more scarce, which means that the dollar becomes harder, actually, it becomes a harder money temporarily, right? That people flock back to the dollar. And so the the inflation that excess dollars created in the real estate market, in stocks, in gold, Bitcoin, whatever, that comes down a little bit because money is being sucked in the system and people sell those to go back to the dollar. This is an oversimplification of things, but this is basically what it is, what's happening. And then the cycle repeats itself. Now, what you have to also understand is that the Federal Reserve, every single time it starts taking, goes to QT, it starts taking liquidity out of the system, it has to go back to QE, flooding the system with more dollars faster. So in the past, it could tighten and pull money out of the system and wait a long time before it reversed. But each time, it kept getting less time and less time and less time. So we're pulling money out. Oh, no, we have to pivot now. Now we got to push money back to the system. And he said, oh my God, we have to pull money back out? But all of a sudden, everything starts collapsing too hard. Oh my God, we have to put money back into the system. And so each time they try to fix things by pulling the reins back, something breaks. And then they have to start pushing money back. Oh my God, we can't have that break anymore. And each time something breaks faster and faster and faster. Let me show this to you. I can show this to you. It's quite hilarious, to be honest with you. I can show this to you. So take a look at each time. So the way you pull money out of the system, the way the Fed pulls money out of the system is to raise interest rates, right? So each time you see the raising of interest rates, right? Rise interest rates, boom, they have to lower interest rates. They have to reverse. Rising interest rates pulls money out, lower interest rates pushes money back into the system, right? So you have to lower it again because something started breaking right there. And then they're like, oh my God, we got to control inflation here. It's getting too high. But let's raise interest rates, boom. And then something breaks and they have to change course and lower again. And every time they lower, it gets lower. But every time they pivot, right? The pivot is lower too. So they can't ever raise as high as the last time. See the high here and the high there? They can't ever raise as high before they have to pivot. Now look. You know what's going to happen here, right? Boom. And when that happens, oh my God, you're going to see a risk on, right? You're going to see, guys, a risk on scenario. You're going to see moves to the upside like you've never seen in your life before. You think that Bitcoin doubled 22 times from when I bought it initially. It doubled 100%, 100%, 100%, 22 times. You think that's impressive? Watch. I am telling you, just watch when the pivot this time happens. And it's not going to happen from when Bitcoin's 3,000 again. It's going to happen from a higher point. I don't know what that higher point is. Maybe that's 20,000. Maybe that's 22,000, 21,000. Maybe that's 15. Maybe that's 18, whatever. But as long as it's higher than the last time, 3,000, as long as the drop is higher, I am telling you, when the pivot comes, all you're going to be able to say is, oh my God, Oliver nailed this thing. I am not doing anything special. I'm just showing you history. I just showed you how every single time the Fed has to reverse course earlier than it did last time. Every single time. Now, if that changes, my theory is wrong. All right. Okay. I'll be wrong, and I might just have to knock on your door and ask if you have a special, if you have an extra room somewhere in your attic or your basement or something like that. I'm telling you that if it doesn't happen like that, I will need counseling and I will need some place to stay. Not because I will lose my houses or anything like that, but because I just won't be able to stay there. I don't eat a lot. I read a lot. I'm very quiet. All right. Just so you know, I'm telling you. All right. I bet, and I bet big. It's just the way I've always been, guys. I bet, and I bet big. So that's the way that you, for the most part, traders, that's the way you kind of read the world. When the US catches a little cold, everyone else gets COVID. You understand what I'm saying? So I shouldn't say that. Shoot. Everyone gets the flu. All right. So um, you want to connect the world, just follow US monetary policy. And that's how you keep it together from a macro perspective. And it gets a little bit more involved because one thing that I think a lot of people don't understand is that the bond market rules everything. You've got, if you really do this seriously, you've got to watch the bond market. You've got to watch the repo rates. You've got to watch the yield curves. Um, you know, and those things will give you a deeper insight into if something's breaking. And guys, the odds of us going into a recession the odds are really high. Like, I'm not saying that it's a 100% chance, but it's close. I mean, it's not far off of a 100% chance. The Fed's trying to do this soft landing, and I just don't think it's possible. And if history's any guide, you have to bet that they're not going to be able to do it because they've done it so few times. So if you look at somebody trying to do something 10 times and they only did it right 2 times, are you going to bet with the 2 or are you going to bet with the 8? I'm going to bet with the 8. They're not going to be able to do it. They've only done it a few times. And they fail at it every single other time to do a soft landing without raising interest rates, pulling liquidity out of the system, tightening everything without the economy nosediving into a recession. It's like finding a needle. It's like trying to hit a needle in a haystack, guys. It's the odds of it happening are very small. So what I'm saying is that we have to brace ourselves for a recession. And a recession will come, whether that's late this year, early next year, whatever. I just believe it's coming and we're going to have to deal with that. But I will tell you this, from a market perspective, statistically, turns happen in the recession. So what I'm saying is that if we get a recession, if we get recessionary signs, if we get recessionary clarity, late year, early year, trust me, the turn is either about to happen or has already happened. Turns happen before recessions. And at the very least, at the very latest, they happen in the beginning of a recession. So as soon as you announce a recession, the market's turning. Now, it's interesting who gets to decide, when we've been in a recession. I mean, I think it's something like two down quarters of GDP growth or whatever. But anyway, the bottom line is it doesn't matter. By the time the world gets announced that it's a recession, trust me, market's rocking. Do you understand? Markets rocking because the markets are an anticipatory mechanism. They don't respond to the now, they respond to the future now. Or the market tries to anticipate the future now. It's not the now. This is why people are not successful market players largely is because they're focused always on the now. Bitcoin's collapsing, but wait a minute. From this price to 2026, what's the odd that it's lower or higher? Now we're talking a different game. All right. Same thing, but the stocks are crashing. But wait a minute. All right, so stocks are down 30, many stocks are down 30 to 60%. What's the odds that they're lower 7 years from now or higher? So that's what the market attempts to do, just on a shorter time frame. Is the market attempts to do it more like 18 months out. So the market is trying to read 18 months from now, are we higher or are we lower? If the market were a person, that's its only question it would ask you. Do you think we're higher 18 months from today, or do you think we're lower? And if the market doesn't know, it just basically stays out. But when it knows, it starts to collectively start making bets, not now, but where it's anticipating 18 months from now. So 18 months to 24 months from now, is Bitcoin higher or is it lower? I say it's higher. Do you understand? So I'm not playing for now. I've learned this game a long time ago. You don't play the market based on news articles about now. It's ridiculous. All right. Yeah. A last question here, guys. I'll take. How do you think, Oliver? This is coming from Cesar Gomez. Oliver, do you think it's a good idea to have multiple trading strategies that you can use? Um, I don't know what you mean by strategies. Um, because people use techniques and strategies interchangeably, and they're really not. Um, First of all, I think that one trading plan should govern all of your approaches. So that's what ties them together. You should have one filter that you push all of your trades through. Now, the tactics that determine when you enter something and when you exit it, those things can be a variety of things, but the grand filter, the trading plan that you push all of your trades through should be universal. It should be the same. This is where consistency comes from. You can't have multiple trading plans and think that you can get consistency from playing the market in multiple different ways. Consistency comes from doing your trades consistently. Do you understand? You can't get consistency from lack of consistency. Consistency breeds consistency. The consistency in the plan has to be there. The techniques that get you in and out can be, you can have variety there. Like I get in with elephant bars, I get in with tail bars, I get in with bull 180s, I get in with RBIs, GBIs, I get in with moves off the 200, I get in moves off the rising 20. That's a variety of things. But the plan, once I get into the trade, the plan that governs each one of those trades is identical. And it is that identical planning out the trade, working the trade, managing the trade the same way every single time. That's what breeds consistency. I hope that helps. Danielle, excellent question. Danielle's asking, how can they anticipate when there's a war and a lot of global situations that can change the future? This is very true. There are black swan events, things that you can't anticipate or predict that interrupt cycles, that interrupt the flow of things. Absolutely. But they're usually temporary. And so you have to make sure that you are betting on something that has the fortitude to survive a sudden, unexpected jolt to itself. I believe Bitcoin has reached that point where, okay, it can take a hit like anything else can take a hit, but it's proven its ability to resurrect itself after every single hit. And it has resurrected itself better than any asset ever in the history of the world. This is why Bitcoin has the best 2-year record in the world, the best 5-year record in the world, the best 10-year record in the world, and the best 13-year record in the world. This is why its average annual gain was over 213% a year. And the best performing thing at second place was the NASDAQ at 16% a year. Think of being in second place and you're doing 16% a year, and first place is doing 213% a year. First place is so far ahead of you that you think you're first when you're second. You can be so far behind first place that you actually feel and think and start acting like you're first. That's what the NASDAQ did for many years. It's felt it was first, it acted like it's first. All the news treated it like it was the first, like it was in first place. Nothing outperforms tech stocks. Nothing outperforms the NASDAQ. But what was conveniently left off the list was Bitcoin. First place, 213%. Second place, 16%. Crazy, right? And so I don't think it's that now after the last couple of years. It's dropped a little bit, but maybe that gets fixed on the next run. Who knows? But yes, so you can have things like black swan events, China banning Bitcoin mining. I think that interrupted its bull run. I think if that didn't happen, Bitcoin was headed past 100,000. That was a jolt. The Fed taking a stance, a hawkish stance in the war, hit Bitcoin on its second run to all new highs. We can't anticipate these things, but what doesn't kill it makes it stronger on the turn. And if you think that what's happened to Bitcoin before these things have shaken things up a little bit, imagine on the other side. Think of yourself when I tell you you have to lose first before you become a master. You have to take hits first before you become good. You have to lose your life to gain it. And you prove to yourself that if you prove that every time I get hit, I come back, that every time I hit the ground, I come back and I come back better. If you prove that to yourself over and over again, my God, words can't express what your future is going to be. Because do that enough, and you start to realize nothing can hold me back, that I will always come back. That is my history. That is what I do. And that is the confidence you should have in yourself. And that's the confidence I have in Bitcoin because it's already earned that confidence. Traders, I love you. I love these sessions. They keep getting longer and longer. I don't know if I can keep this up. I might have to curtail them a little bit, but I just enjoy my time with you guys. Thank you so much for your support. Thank you for your questions. Thank you for your patience. Thank you for all of those who still stick around and I don't get to your questions. I wish I could ask them. I wish I could answer them all. All right. But I do promise this. I'm coming out with more live sessions. We're going to do a midnight trading live session. Yes. It's going to be midnight my time. It might be morning your time, whatever, but it'll be midnight my time. I'm bringing back what I used to do on Periscope. I'm bringing that late night talk, casual talk back live here. I'm bringing live a technical analysis day where it's not going to be Q&A as much as it's just going to be lesson, technical analysis lesson every single week. You stick with me every week on this technical analysis day. In a year, 6 months to a year, you're going to be a technical expert. You're going to be able to read charts better than 99% of the people out there. All right. I believe that. And I'm going to bring back story. I'm going to bring back story time. I had a lot of stories to tell. I've been in this industry, guys, from the beginning of the 1980s, professionally from 1986, the mid 1980s. I'm a pioneer in a space. Some people regard me as an OG. I have created and sold some of the largest organizations in this industry. And it's time for me to tell my story. That's right. And I'm going to do that. All right. But listen, thank you so very much, guys. If you haven't subscribed to the channel yet, please do. The other thing I will tell you is that if you're free this weekend, I need you here with me this Saturday. This Saturday, I'm going to be covering, guys. I don't know if I can show you this to you. I'm going to be covering I'm going to be doing this special event. The 10 things every trader needs to know to become profitable. Guys, I am telling you, there's nothing else. If you can do these 10 things and don't get distracted, don't get pulled away, I'm telling you, you're going to make it. I believe this, right? 10 things that every trader needs to do to become professional, to become profitable. And we're going to cover those 10 things this Saturday. So make sure you sub you register for that. Make sure you click the reminders for that, right? I believe it's already posted, so you can go to the page English, Spanish, Portuguese, and make sure you click the reminders so you don't miss this. All right? We're doing this live, and I want you to be there. All right? Thank you so much, guys. All right? You have no idea how much you guys mean to me. Thank you. Ciao for now. Boom, boom, boom. Yes. Whoo, another one. We did another one.